Hi everyone, welcome to SRV Academy of Accounts. Here all my preparations and presentations are only an exam point of view. Follow my regular classes and get more marks in your semester exam. Subject: Income Tax Law and Practice. Chapter: Set off and Carry Forward Losses. Class 1. Dear students, and today we are going to discuss yet another important chapter called Set off and Carry Forward Losses. And this is a very important chapter for your examinations. Now we are going to discuss about simple meaning of set off losses. Set off losses means adjusting the losses against the profit or income of the particular year. Losses that are not set off against the income in the same year can be carried forward to the subsequent year. A set off could be an intra-head set off or an inter-head set off. Dear, this is the simple meaning. The set off losses means nothing but the loss it should be adjusted against the income in the same year. The excess over loss it should be set off in subsequent years. So here we are going to have three processes to set off losses. The process 1 intra-head set off, and process 2 inter-head set off, and process 3 and carry forward set off losses in subsequent years. Now we are going to be discuss one by one. The first, intra-head set off. The loss from one source of income can be set off against the income from other source under the same head of income. For example, loss from business A can be set off against profit of business B, where business A is one source and business B is another source and the common head of income in the business. Okay, some exceptions to intra-head set off. Speculation business loss. Speculation business loss, it should be adjusted only in speculation gain. Loss from an owning and maintenance of horse races. Loss from horse races is to be set off only profit from horse races. Long-term capital loss. Long-term capital loss, it should be set off only in long-term capital gain. Specific business loss. The specific business loss also is going to set off only in specific profit. Now we move on to the inter-head set off. After intra-head adjustment, the taxpayer can set off remaining losses against the income from other heads. Loss from house property can be set off against salary income, the maximum limit of 2 lakhs. The excess over 2 lakhs, it should be carried forward to the subsequent years. Business loss, other than speculative business, can be set off against any head of income except income from salary. So this is the intra-head set off, my dears. Simple. Okay, the process 1 intra-head set off and process 2 inter-head set off, and now we move on to the process 3. See, the carry forward and set off losses in subsequent years. Okay, here you may divide the three columns, and first serial number, particulars, and provisions or adjustment. See, my dear, this is the process 3, the carry forward and set off losses subsequent year. So here loss we are going to make adjust in subsequent year, excess over loss after adjusting intra-head and inter-head set off losses. Salary, no loss, no set off. House property, loss under the head can be carried forward for 8 succeeding previous years and to be set off under the same head only. In subsequent years, we are going to set off under the same head only. Next, business loss. A general business loss. Loss can be carried forward for 8 succeeding relevant previous years and to be set off from any business income, including speculation profit. Speculation loss. Loss can be carried forward for 4 succeeding the previous years to be set off only from speculation gain. Next, unabsorbed depreciation. Depreciation, which means unadjusted, as either there is no income or less income in relevant previous year, it can be carried forward till it is fully adjusted from any income. Now, the capital loss. Short-term capital loss. Loss can be carried forward for 8 succeeding previous years to be set off short-term capital as well as long-term capital gain. Now, so long-term loss can be carried forward for 8 succeeding previous years to be set off only from long-term capital gain. And last, expenses incurred on maintenance of horse races. Okay, expenses can be carried forward for 4 succeeding previous years and to be set off from income of the same activity. I hope you understood the concept of set off and carry forward losses. Here we are going to follow the three process, and process 1 intra-head set off, and process 2 inter-head set off, and process 3 carry forward and set off in subsequent years. Simple. So now we are going to work out this small problem. Mr. Arul, an Indian resident, furnishes the following particulars of his income for the assessment year 23-24. For the assessment year 23-24, you are required to deal with set off and carry forward losses. Income from securities gross 10,000. Income from residential house computed 5,000. Profit from rayon business 25,000. Income from agency business 2,000. Speculation income 2,000. Short term capital gain 4,000. Long term capital gain 9,500. The carry forward item from the assessment year 22-23 are loss from textile business discontinued in 2021 4,000. Loss in agency business 3,000. Loss from rayon business 3,000. Speculation loss 4,000. Short term capital loss 6,000. Long term capital loss the previous year 2021 6,500. Current year depreciation for rayon business 500. So these are the informations. See my dear. So the current previous year. So you know what is our relevant previous year? Our previous year is 22-23 and assessment year is 23-24. Okay. Now we are going to work out the problems. So before you work out the problem, just you recall and recollect all the provisions in set off and carry forward. Now we are going to work out the answer. Write down the heading, the computation of gross total income for the previous year 22 and 23. And here you may divide the four columns, particulars, amount. So whenever you are going to prepare set off and carry forward and gross total income, better you may divide the four columns. We start with the income from salary. Here we don't have any information. Just put outer column nil, and we move on to the income from house property. Yes, here 5,000 is given computed, and put the outer column 5,000. And next, third head, business income, and start with speculation business. Okay. Now we look into the problem for informations. See, let's see. In business related, what are the incomes are given in speculative? Yeah, speculation income is given 2,000. Yes, okay. In speculation loss, the carry forward loss is given 4,000. Now we move on to the problem. See, income from speculation business 2,000 and set up brought forward speculation loss 4,000 is given. And what about balance? The loss 2,000. So that loss it should be carried forward to the subsequent year. So you know the provision for speculation business loss. The loss it should be set off only in speculation income. Excess over loss it should be carried forward to the 4 succeeding the previous years. Here 2000 excess loss we are going to carry forward to the our subsequent year 23-24. Okay. Now business, general business, rayon business. Now we look into the problem. Profit from rayon business how much? 25,000. Loss from rayon business is given. Yeah, 3,000 rupees given. And current year depreciation of rayon business how much? 500 rupees. Okay. We move on to the problem. Income from rayon business how much? 25,000. Less current year depreciation, you know 500. You deduct balance 24,500. Set up brought forward business, rayon business how much? 3,000 rupees. And discontinued business, textile also. As per the provision of intra-head, we make adjust textile business loss, discontinued loss. Okay. So rayon business loss 3,000 and discontinued business, textile business 4,000. Altogether 7,000. We are going to deduct out of 24,500. The balance 17,500. Let's we move on to the question. Profit from rayon business is over. And now income from agency business. How much? 2,000 rupees. The loss from agency business 3,000 rupees is given. Okay. So other than agency business, here we don't have any business income and any carry forward losses. Okay. Now we move on to the problem. Income from agency business, general how much? 2,000. And set off losses, the brought forward how much? 3,000. And excess loss 1,000. We are going to set off rayon business. as per the provision intra head. 1,000 rupees we are going to adjust out of what about rayon business, and balance income under the head profit and gain 16,500. We move on to the capital gain income. See, this is the continuation, the same, the four column particulars amount. Now we move on to the question. Okay, see here, the short term capital gain is given 4,000, a long term capital gain is given 9,500, and short term capital loss 6,000, and long term capital loss of the previous year 2021 how much, 6,500. Okay, now we move on to the answer. Is income from capital gain. See, a long term capital gain 9,500, set off the brought forward capital loss 6,500, and balance 3,000 rupees profit, and followed by and short term capital gain 4,000, and set off brought forward capital loss how much, 6,000, and excess over short term loss 2,000, and we are going to deduct out of long term and balance 1,000 rupees a long term capital gain. Here I want to recall the provisions in capital gain. Short term capital loss can be carried forward to the 8 succeeding the relevant previous years and to be set off short term capital gain as well as long term capital gain. Now we move on to the income from other sources. Yes, interest on securities given 10,000. Yes, now you find the total, the gross total income how much, 32,500. Yes, this is the very simple concept for set off and carry forward provisions. I hope this is the most expected problem in your exams, my dears. Now we are in the end of today's session. I hope you understood the concept is very well. Dear students, please subscribe my channel and hit the bell icon to get the further notification about my new uploads. In upcoming videos, I am going to work out yet another important problems in set off and carry forward losses. Thank you. Thanks for watching.